Hello, crypto explorers. Welcome to another enlightening episode of Crypto Tour. If you're new here, do hit the subscribe button. For our returning viewers, we're thrilled to have you back. Today, we're taking a journey to the intersection of cryptocurrencies and developing nations. While cryptocurrencies are gaining traction globally, their potential impact in developing countries could be game-changing. So let's embark on this crypto tour and see how digital currencies are revolutionizing economies in the developing world. 1. Setting the economic stage in developing nations. Before we dive deeper into the transformative potential of cryptocurrencies in developing countries, it's crucial to set the economic stage and understand the unique circumstances these nations face. Developing nations, also often referred to as emerging or low-income economies, typically grapple with several financial challenges. Many of these countries have a high concentration of people living in rural or remote areas where traditional banking facilities are often sparse or non-existent. This geographical challenge, coupled with a lack of necessary infrastructure like reliable internet access, makes it difficult for many individuals to engage with conventional financial services. Another common issue is the economic instability often associated with these countries. Economic policies, inflation rates, and exchange rates can fluctuate significantly, causing the value of the local currency to swing wildly. This volatility can erode people's savings and deter foreign investment, further stymieing economic growth. Furthermore, the income levels in these regions are often low, and many people may not have the resources necessary to maintain a traditional bank account or access other financial services. This situation leaves a vast portion of the population unbanked or underbanked, a term we use to describe individuals with limited access to formal banking services. These challenges often result in a significant portion of the population being marginalized from the global economic system, slowing down economic growth and making it harder for these countries to break the cycle of poverty. Cryptocurrencies, with their decentralized nature and digital accessibility, could offer potential solutions to these issues. By allowing people to transact directly without intermediaries and providing an alternative store of value that can potentially safeguard against local economic instabilities, cryptocurrencies can address some of the financial inclusion and stability challenges faced by developing nations. However, it's essential to bear in mind that while cryptocurrencies offer promising solutions, they are not panacea for all economic challenges. Understanding the unique context of each developing nation is crucial to tailor the implementation of cryptocurrencies effectively. 2. Cryptocurrencies and financial inclusion. Financial inclusion refers to a world where everyone, regardless of their income or social status, has access to and can effectively use appropriate financial services. In many developing countries, a significant portion of the population is unbanked or underbanked, meaning they have limited or no access to essential financial services like bank accounts, credit, insurance, and other financial instruments. This could be due to various reasons, from living in remote areas far from banking facilities to not having enough resources to maintain a minimum bank balance or meet the bureaucratic paperwork requirements. This is where cryptocurrencies come into play as a promising solution to foster financial inclusion. Cryptocurrencies, being digital and operating on a decentralized network, don't discriminate based on geographic location, wealth, or social status. As long as one has a smartphone and a stable internet connection, which are increasingly accessible even in the most remote parts of the world, they can participate in the crypto economy. Consider a farmer in a remote village who now can securely store his wealth in cryptocurrencies, safe from local economic instabilities. He can also make transactions, pay for goods and services, or receive payments from anywhere globally, bypassing the need for expensive wire transfers or dealing with physical cash. Not only that, but the global nature of cryptocurrencies also means that this farmer can access a plethora of financial services that were previously unavailable or unaffordable. These can range from getting a loan to finance his crop to insuring himself against potential risks. The transformative potential of cryptocurrencies in promoting financial inclusion also extends to small and medium enterprises, SMEs. Many SMEs in developing countries often struggle with limited access to credit and other financial services. With cryptocurrencies, these SMEs can access global financial markets, receive investments, and even leverage decentralized finance platforms for loans and other financial products. Thus, cryptocurrencies could effectively democratize financial services, empowering millions of unbanked and underbanked people in developing countries. By creating an inclusive financial system, cryptocurrencies can potentially stimulate economic growth and reduce poverty in these regions, marking a significant stride toward global financial equality. 3. Lowering remittance costs. A significant benefit of cryptocurrencies in developing countries is their potential to lower remittance costs. Many people in these countries rely on remittances from family members working overseas. Traditional remittance methods often come with high fees and slow processing times. Cryptocurrencies can provide a faster, cheaper, and more efficient alternative, reducing the cost of sending money across borders. 4. Facilitating trade and commerce. Cryptocurrencies can also facilitate trade and commerce by providing a secure and efficient medium of exchange. This is especially useful in countries with unstable currencies, as cryptocurrencies can serve as a more stable store of value. They can also streamline international trade by removing the need for currency exchange and the associated costs. 5. Boosting local economies. The potential of cryptocurrencies isn't limited to individual users. They can also stimulate local economies. Startups and businesses in developing countries can leverage blockchain technology and cryptocurrencies to attract global investment, create new jobs, and drive innovation. 6. Overcoming challenges. While the potential of cryptocurrencies in developing countries is immense, there are challenges to overcome. These include a lack of technological infrastructure, regulatory issues, and the need for education about crypto technology. However, with ongoing developments in the crypto space, these obstacles are gradually being addressed. That's our crypto tour for today. Cryptocurrencies hold great potential in transforming economies in developing countries, fostering financial inclusion, reducing remittance costs, and boosting local economies. The road may have a few bumps, but the journey is indeed promising. If you found this video informative, make sure to hit the like button and share it with fellow crypto enthusiasts. And remember, if you haven't already, subscribe to Crypto Tour for more journeys into the ever-evolving world of cryptocurrencies. Until our next journey, keep exploring.